Hey guys, it's Jonathan. Let's do a week in review. So this week was tough. I was wrong. Just got to come out and say it. I was wrong. And the reason why I was wrong were a couple of reasons. For one, I just can't believe this rally. It's really crazy. So I guess the rally in the S&Ps, and in front of you, I have the S&Ps over here to the right. I also have 2s, 10s. 2s, 10s is the front end of the yield curve, the difference between 2-year rates and 10-year rates, a very, very widely followed kind of barometer on the economy. But back to the market, I was wrong. Still am wrong, actually, because I just can't get this bearish feeling away. S&Ps, I'll open it up. Daily, got right by that 200 period moving average on a daily, really big number. I figured it would fail. I figured that we would need some news to get through there. Maybe the news comes in tariffs going away or some phenomenal earnings or something. I don't really think we had that, but nevertheless, S&P futures got to that level. Yeah, it was a little bit of resistance, but really plowed through. Now, the reason why I had a strong opinion of that being resistance, and I still kind of do, I don't want to be stubborn about it, but I still do, because the reasons of why I think that the market's going to go down hasn't really changed, because 2s, 10s is right here. I have both of them on a daily. I put 2s, 10s on a line chart. All I did was 2-year future contract minus the 10-year future contract, but you have to do a proper weighting. To get the proper weighting, it's 2 times ZT minus ZN. That'll give us the proper, it's called DV01 rating or formula, so we can actually follow the spread. But hang with me a little bit, because 2s, 10s flattened. That's what this is called, flattening, which means 2s and 10-year yields are getting closer and closer and closer together. As it was flattening, and this is a really, really big move, you'll notice the exact same time, look at the market, look at the S&P futures, right? It mimics it. Same thing. And during this time, all the headlines were, oh no, 2s, 10s is flattening. The last 9 times it's flattened. We've ended up in a recession over the next 18 months. Oh no, the world is ending because we're flattening so hard. But then 2s, 10s stabilized. Same day, the market stabilized. Okay? Not surprising. Market rallies, follows through. 2s, 10s rallies, but fails. So once 2s, 10s fails right here, the market continues to rally. For me, that seems like a really, really big disconnect, because think about it. The reason we're falling, one of the main reasons we're falling, is because of a flattening yield curve. We may go inverted. Historically, that's led to a recession. Naturally, there's more risk in the market, so the market comes off, the VIX goes higher. That makes sense to me. Well, 2s, 10s rallies and fails. Darn close to getting right back to danger zone, but look at the market. The market's just ripping higher. How does that work? Is this disconnect? Can this last? I don't know, guys. For me, I'm calling BS on it. Now, yeah, it's gotten above this 200 period moving average. The market looks strong. The market even feels strong. But I was wrong this week. And my apologies to those who follow me closely, especially the coaching clients, the members. The reason why I'm bearish is because of the yield curve. If the yield curve continues to flatten, continues to stay upward, continues to go down, I got to tell you, I'm concerned about risk. I think it's so important to make sure that your portfolio is protected. And you can do that by just buying some insurance. What I tell my coaching clients is, don't just sit there long a whole bunch of deltas. If you own 5 different stocks, you own 100 shares of each of those stocks, you're long 500 deltas. If you buy puts in the SPX or in maybe a name that's weak going into earnings, it'll lighten the load of those long deltas in your overall portfolio, and that'll help balance you out. That'll give you some protection in case, I'm right. In case 2s, 10s doesn't turn, maybe continues to go lower. Maybe we do go inverted. If that happens, S&Ps will get annihilated. That's what I'm looking at. So Yeah, this week, wrong. Fine. We have our head up, guys. It's not a sprint, it's a marathon. As long as this 210 stays offered, I am very, very concerned about the overall risks in the economy. And I got to tell you, I'm bearish the overall market, even if it continues to rally. Because right now, I just think the market's wrong. Hope that helps. Have a beautiful weekend. My name is Jonathan Rose, owner of what was Active Day Trader, soon to be Masters in Trading. Thanks, guys.